Hey everybody, this is Jim at freechartvideos.com using time-honored techniques to understand modern markets. This video is for educational purposes only and is not intended to be used as any form of investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own due diligence and make investment decisions that are suitable for your own financial situation. I am not a licensed professional. I'm just a guy that draws lines on charts. So let's look at some lines on a chart. Okay, before we get started, the first thing I'm going to say is something of a political comment. And please don't take this too harshly. I'm going to say it kind of across the board. But I really believe this. The weakness that we've been suffering through over the past few sessions is, at least in part, due to the nervousness over Congress and the president not able to work out a deal here with the debt ceiling. And I just want to say this is just another example of how government consumes wealth as opposed to creating wealth. I want to say that again. This is just another example of how government, and any government, how they consume wealth rather than create it. So the government, no government, can create wealth. The wealth has to be created by the individual through businesses, through entrepreneurship, through risk, through the application of capital, talent, time, and effort to be actually productive at something. Folks, the government is a big, giant leech. That's what it is. So, I'm sorry. I hope you guys didn't think I was just a big government guru, chart reader guy. I am by no means. Think about it. I think it was said some years ago that for every dollar the government collects in taxes with the intention of returning that to some who are less wealthy, they skim about 85 cents of that off just to deliver that dime and a nickel. You know, if we didn't have taxes, I would have a lot of money that I could give to charity, and I bet you would too. But I'm off my soapbox. Here's what we're looking at. We're looking at what looks like we're going to, if we get through this black line right here, which has been kind of an intermediate level of support here, that line is right at 1,300, maybe a shade lower. It held a few days back, and in here again we're right at that level once again. If that breaks down, technically, the chart says it should get a little lower than that blue bottom, because that would make it something of a short-term double top. But I'm thinking it would be caught on this blue line or hopefully on this rising gray line. If these lines give way, then I'm thinking it's time to really kind of be on alert, because this really, well, it's not just time to be on alert. This would represent the neckline of a Head and Shoulders top. So if this breaks here, the markets are probably in deep weeds for a little bit, and would need to come down to roughly the mid-1100s, as we've been talking about as a possibility all along. So again, I see this as a potential Head and Shoulders. The fact that we could not mount an attack on this line, and we failed to do that right here, tells me that this could very well be what we're dealing with. Now, that said, we still have the possibility, until that happens, that this breaks out over the top of this. So who knows? Maybe everyone's really nervous right now. Maybe suddenly there'll be this grand compromise that just makes the markets tickled to death, tickled green, and we zoom out of the top of this thing and start to head up to the 1400s. There's simply no way of knowing right now. But I can tell you this line is critical. This line is critical. And whichever one of these guys goes, that's the way the market's going to go. So right now we sit almost smack dab in the middle. And so therefore I am just wait and see. And if we get down and we start to take this out, and we do take it out, and if you're caught, remember you almost always get at least some pullback to that line. So anyway, that's just kind of what's going on with the S&P 500. Let's take a quick look at a couple other charts. Looking at the dollar index, you can see that this is very bearish for the dollar. This was a bear flag that broke down, and the dollar should be hitting a new low down around 72 minimum, and probably will tag this line again down in the low 70s. So this is a little counterintuitive with what we would expect to be seeing in the S&P. You know, we'd expect that with this weakness in the dollar, that the S&P would likely, and that the markets in general would likely be rallying, but that is not the case right now. So let's move on. Looking at the Nasdaq, you know, it looks like it's in better shape because we have we're not nearly as close to that bottom as we are in the S&P that corresponds with the middle of June. And the case could be made that the Nasdaq may be consolidating right here and could potentially make another run at this line. So it's all really kind of screwy and confusing, to be honest with you. The Dow Jones, here again, we've got this line right here that would represent resistance. If we can rally up and take that out, then the Dow is going to rally up to likely 13.5 minimum, but that's got to happen. Again, if we back out on this 2-day chart, if we do the same thing that we did with the S&P, you can see that where we start our channel right here, you can see that the Dow is very close, as is the S&P, to this rising line of support. And I'm drawing it starting right here because that is where other lines and other channels that came off this bottom, that's where they started to work. So I'm just sticking with that. We'll see. It's boy, you know, this is tough sledding right here. And finally, one more chart. Finally, here's the Russell 2000. There's that thing that I thought was shaping up like a like a bull flag. It broke out, and we have now back tested that twice. Drawing a line again back from that about a week after the March low to this bottom, and this bottom. You can see it looks like it should bounce here. And again, if it does, and it takes out this black line right here, then this will have become an inverse head and shoulders, and the Russell would make a move to well over 900. But you know, again, when you're sitting right at this level right here, it's a tough read, because if this breaks, then we could be looking at, instead of this little inverse pattern here, we could be looking at a standard head and shoulders. The good news is that this line right here really has not broken yet. I mean, I think maybe the case could be made that, depending on where you draw that line, that maybe it closed slightly under it, but not by a margin to say that that's a broken line yet. So look, guys, this is tough going, and I hope you're doing well with it. If you detect any misery in my voice today, it's because I had Sprint going into earnings, and boy, if it hadn't been for that, I would have been up across the board. But you know, it seems like for the past 3 weeks, there has been at least one stock in my three portfolios that has just, it seems like it just seems like on an up day I've got one bad actor that just really kind of takes the rug out from underneath the whole thing. So anyway, live and learn. That's the charts for today. I appreciate you watching, and there'll be more to come. Thanks.